video. This one is just going to be a little bonus tuition I'm going to throw out there. And I wouldn't necessarily call this like a concept I've come up with myself, but it's just something I've kind of noticed when um, like analyzing the behavior in the markets and kind of like how some of the previous trades have worked out. So what this concept is called is a false retracement. Now, if we look at basic market structure, right, what we see is, let me just sort this out. Right, what we see is market structure is like this, right? If we're in a downtrend, we do this. Yep. Now, what you need to understand is that these breaks of structures are very important. Why? Because without this break of structure, we aren't going to be continuing this downside trend, and we don't know which way the market's going to be going in. But what's even more important is assessing what price has mitigated at these points here. Now, whatever price has mitigated in the past previously needs to be significant enough for price to want to come and break this low here. Does that make sense? So whatever price mitigated here needs to be significant enough for price to want to come up, and once it's mitigated, to want to come down lower and break this low. If whatever the mitigation was doesn't make sense, and there was whatever it may be, like a weak reaction, it didn't really mitigate out of anything, clear or anything necessarily strong or evident, or if it just doesn't make sense, then 9 times out of 10 we're probably not going to come break that low, because this mitigation wasn't significant enough. And in that case, you see something like this, right? So let's say we had retracement. Whatever price mitigated here was significant enough because we came and broke this low. Now let's say we've now retraced up, right? We've come up, and let's say price has started to do a downtrend. So we obviously know this has mitigated something here in the past, like so. But let's say price has actually come down and is literally just starting to do this now. Nothing noteworthy, nothing, for us to actually determine to take a position, or nothing for us to actually work with. So in this case, what you'd actually identify is that whatever price mitigated here was not significant enough for us to come down and break this low. So whatever price mitigated, again, was not significant enough for us to actually come down, purge this low, and create new market structure to the downside. So what that will tell me is that above, let me just remove that. What that tells me is that above this high here, we have something called open interest. So let me just write that down for you. Open interest. There we go. So what open interest is liquidity. But it's the liquidity above a high, right? So if we have open interest, it means that we haven't come to break this low, and there's an open interest above this high, meaning that institutions or banks are kind of interested in something that's above this level, because there's liquidity resting above here. And let's say we actually have an inefficiency up here, what you'll tend to see is that we'll actually come up, we'll purge the high, so we'll purge this high here, we'll take that liquidity out, and then we'll drop, and then we'll create new market structure to the downside. Now what's interesting here is, obviously with what I've taught you, when you see this break of structure, some people would think that, oh, we have a BOS, let's start looking for entries within this leg here, right? But if you kind of understand this kind of general concept, you you kind of like see that we haven't really broken this low, and 9 times out of 10, if you're on the higher time frame, you kind of see that this point here is quite irrelevant. And obviously, all up to interpretation. You need to take every setup with a different perspective, and you need to treat it appropriately. But if you obviously take this into consideration, we we haven't really broken this low. So now there's open interest below here, and there's liquidity below here too. So obviously, we took out all these equal lows here, and we purged and we created new market structure to the downside. Now, yeah, sorry. So just to touch back on the last point. So when we were here and we started to make the retracement back down, I've taught you guys to identify that this was a BOS. Now, yes, it is, but 9 times out of 10 we will have a sharp reaction away. So you need to kind of see. If you guys watched the previous tuition, I think it was the damn, I forgot. Let me think. Oh, I forgot. Damn, which one was it? No, I forgot. But what I kind of touched upon was the fact that sometimes you need to see the market in two views. When you're taking a sell position, all your brain is wired to do is see all the ways this can go down. The same way, when this break of structure happens, all your brain is wired to do is to look for opportunities within here to identify all the ways this could go up. But you need to look at the market from an unbiased perspective. You need to take into account all the ways it could go down and all the ways it could also go upwards. And in this case, if you identify that we have an inefficiency here and we had a strong reaction and we purchased liquidity, we're 9 times out of 10 gonna carry on this downtrend. So it's just something to keep in mind. Don't just think, oh, BOS, let me start looking for longs, because what you're gonna start doing is you would have longed off an inefficiency here, the market would have went against you. You would have longed off a lacuna here, market would have went against you. You would have saw an SC here, market would have went against you. You would have saw these equal lows here, purged, and then you would have probably saw a SC here that you would have taken a buy off, market went against you, and now you're thinking, well, why the hell is everything these guys teaching me not working? It's because we're still in a downtrend. If we came up and broke this high too, then yes, I'd potentially start looking for buys. So let me just give you a few real life examples of this happening. So right, look here, yeah. Okay, cool. So when we came up here, once we came down, we came back up to retrace. Now, what happened was we didn't actually end up breaking this high, right? So when we started to make the retracement, wait, hold on, I'm looking at this from the wrong perspective. Let's look at this, sorry. Let's look at this, for example. So price made this move to the downside, right? And then when we came back up, whatever this mitigate out of was clearly not significant enough for us to come down and break this low here. So if we broke this low, we would have had new market structure to the downside. So to kind of illustrate this, we came down, right? We retraced back up, and then from here, what we were looking for is to come back down, and then like so, right? But what we actually did was the opposite. We obviously came down, retraced. Now, whatever this mitigated out of was clearly not significant enough for us to come down and break this low. So now let's pair this up with time, right? What did we see? Is that we started to consolidate into the Asian market. Okay, so this tells me that there's what above here? Open interest, right? There's open interest above this candle. So what I'm going to start looking for is areas within this region where price is probably going to come and mitigate out of something. And what I see is this 15-minute inefficiency. Okay, cool. Now let's again pair this up with time. Obviously our inefficiency range is obviously within here. Right there. Let's make this red. Right, so that's where our inefficiency is, right? So let's pair this up with time. We got our 8 a.m. London session right here, right? This is where our London session starts. So let me just highlight that for you. And where is our New York? New York is about 12, so right here. Okay. Okay, cool. Bang, perfect. Now what we got is this window where I'd like this trade to play out. Now it's all good and fair, knowing on the price axis where price is gonna tap, but to also use the time axis and to pair those together, you're gonna get even more confidence and confluence in your trade setup. So now we know that we want to tap at 91300, yeah. But we also know we're gonna try hit it between 8 a.m. and 12 p.m. So if we look at areas of liquidity, this was the Asian low here, yeah. So let's just mark this out, yeah. So now let's play price and see what happens. Okay, upon the 8 a.m. start on the dot, look what we do. Bang, take out the Asian low. So that's our false move to the downside, because what happens after that is we actually retrace back to the upside. Now, people who would have traded fundamentally and would have traded the London Open probably would have started selling here, and price would have went up against them. And now let's keep in mind, people see this strong move and will probably start buying, right? And then what we do, watch this, 12 on the dot, bang, mitigate the inefficiency. Look at that. What is, if we touch back on corporation, what does this show here? That's no corporation. We have no candle closures above the high. We have just the wick rejection, no corporation. This here would have been your false retracement, because we didn't break the low. We came up, we purged the high, mitigated the inefficiency on 12 on the dot. And what happens after that? Let's just say, for example, we decide to take the position here. Stop just above the candle. Nice 2.5 pip stop loss. Let's say we take this down to this low here. Let's play this out and see what this did. Beautiful. Straight into profit. That's the kind of move you want to see. Okay, if we look here, we had obviously equal highs form here. Equal lows, sorry. We purged that liquidity, and we also purged this low here. Literally a beautiful trade setup. So it's just something to keep in mind. Don't see this as a BOS when it's clearly mitigated something and we have no corporation. And don't obviously look at, for example, this inefficiency here. By the way, that was a 1 to 34 for those wondering. That would have been a nice 34%. Don't start to buy it off of the inefficiency and hope for price to make the retracement, because if you look clearly, we haven't really broken this high here. So we're still in a downtrend. This isn't as significant as this is. And again, whatever this mitigated out of was clearly not significant enough for us to break. But what this mitigated out of was clearly significant for us to not only break this, but also to come and break this low here. And just for a little kind of thing I'm looking for in the future, we just delete most of this here. We actually delete all of it. Okay, if we go to the 2 hour, if you look, we pretty much got the same thing going on. So we got a 2 hour inefficiency here. Okay. And let's mark out the 50%, which is right about here. And if we go to the 1 hour, okay, so the 2 hour 50% lines up perfectly with that 1 hour fill. So I'd be happy to take a position here. That would give me a nice, even if I did take it off it, nice 6 pip stop loss. But look what we've done here. Whatever this mitigated out of was clearly insignificant. It was not significant enough for us to actually come down and break whatever. I mean, we did purge this low here, but it was clearly not significant enough for us to make a retracement not higher than this. So what did we have here? Open interest. We came up, we purged that liquidity, and even if you look at the swing from here to down here, right? That's not in premium market whatsoever. Or if we look at this whole swing here, this inefficiency has been put in a nice deep premium pocket. So obviously, what I'm going to look for now is a consolidating Asian session, and by London Open, probably purge the low, come up, tap on New York, literally 12 on the dot there, and then bang, retrace. And obviously look to zoom into price action upon the tap and look for a nice position there. But yeah, that's basically it. This obviously here in this case, this would have been our false retracement. So just something to keep an eye out for. Don't just see this as a break of structure and start looking for areas to buy here. For example, like this inefficiency here. Don't start looking for buys. Look at the bigger picture. Understand we're still in a downtrend here. Yeah. But yeah, besides that, thank you guys for tuning in, and besides that, on to the next.